This is an ECBM Edge presentation. Good late afternoon. We start our broadcast this late afternoon with a story that is rocking the insurance world. The endorsements used to create additional insured status under insurance policies were redesigned in April 2013. For more on this story, we go to Christina, on the street. Christina, how are people reacting to the news?
Is he talking? I can't hear him. Are we on? Yes, Tom. We are here on the street to ask passers-by what they think about this important change to insurance. Hello? Excuse me. Miss? Yes, miss. How has the ability to obtain coverages and additional insured under your business partner's policy affected you?
Wait. What?
Well, the change to insurance requirements in April 2013 wasn't exactly getting major media coverage, but it is important that business owners know that they should reevaluate their standard contractual requirements, to be sure that they call for the best coverage available. Usually, standard lease, supplier and other service agreements can contain hold harmless or indemnification provisions, however, that protection can be limited. And it is only as good as long as the party bearing the obligation has the financial wherewithal to pay for it. Basically, you get what you ask for. So to add a level of protection under insurance policies, you can create a list of additional insured entities. Historically, businesses like retailers and restaurants would routinely deal with these issues in their dealings with their landlords, food suppliers, maintenance providers, and manufacturers. This is because landlords, for instance, require their tenants to protect them against claims arising in the tenant's space. It had always been a good risk management practice to require anyone who your business does business with would take on liability for their work, products, or operations, anytime there was the opportunity to do so. However, since April 2013, there are some important changes that businesses should consider. The insurance industry limited the amount of coverage an additional insured can obtain. It is important for you as a business to know this information, as the distribution of new forms showing this change are not mandatory. Some insurance carriers are even still using older versions of forms that they will soon try to integrate into their customary practices. I'm disappointed in you. It's too soon to say how these changes are impacting businesses. However, the changes will take many people by surprise when they discover that they don't have the coverage that they thought was requested from their insurance carrier. Let's talk about what's different. The new forms allow the language in your contract or agreement to govern the scope, extent, and limit of coverage that the additional insured receives. For example, your business hires a snow removal contractor to clear the parking lot of your building. You require that this contractor has $1 million of coverage and that they name you as an additional insured. If someone was to slip in your icy parking lot, they will almost always pursue a claim against you.
You've got that right.
In the past, you could use the additional insured status to access the $1 million. Plus, you would also be able to get higher limits after that first million through the contractor's excess policies. Now, your limit is just the $1 million that you had requested, and unfortunately, limits are not the only thing that changed. If you go through the trouble of obtaining additional insured coverage, you would want for it to pay claims before your own policy. In our previous example, you would want for the snow removal contractor to pay before your business's insurance would have to pay toward the claim. Therefore, you would need to be sure that the contract required that the snow removal company's additional insured coverage would be the primary, and your own insurance would only be tapped in the case of excess past the additional insured limits. If your written agreements don't expressly contain this language, your own coverage would be the primary, or at best share the claim with the contractor. Finally, insurance carriers will only grant additional insureds the coverage that the state allows. At last count, about 10 states prohibit additional insured status for the additional insured's own negligence. Those states passed statutes that make it impossible for negligent parties to transfer the cost of their negligence to their business partners. either under the contract or through an insurance arrangement. For example, if your maintenance contractor injures your customer, the customer might sue your company.
The who is on the what now?
In the past, you could use additional insured status to make the contractor pay for that lawsuit. However now, if the customer alleges you were independently negligent, you may not have coverage for those allegations under your contractor's policy. This new language makes it harder to cherry-pick state laws to your benefit and limits your options when you are accused of negligence. So any business owner who hires someone else, sells someone else's goods, or leases property is at risk for expensive surprises. Existing contracts may not contain the proper language that triggers the coverage that you need under today's insurance forms. This is especially true for long-term contracts like lease agreements. Therefore, you should review your existing contracts and standard agreements with your risk management and insurance advisor to make sure your standard requirements follow today's best risk management practices. Fortunately, the experts at ECBM realize the risk to businesses and have the experience to guide you through developing a plan to minimize costs. Check out our channel for other videos about risk management. Or click here to find out more about ECBM's risk management consulting services.